So when it comes to investing, there is a ton of information out there right now, guys, from different viewpoints. And more recently, I've been getting a lot of questions from viewers and clients around common topics like, where should I invest? Where should I be putting my money? Should I even be investing right now? Is it a good time to be buying, or should I be holding and waiting for the market to drop a little bit? And so in this video, we're going to be addressing those questions, as well as covering the process of thought that you need to be going through when considering investing, so that you can make better decisions and make less bets with your money. Where you should be investing right now, up next. Hey guys, welcome back to Money Talks. And if you're here for the first time, if you are here again, thank you very much for being here. It's an honor for me, for you guys to be spending your time watching this video. Thank you very much for that. Smash that subscribe button if you haven't, and send us some love by liking this video. So the first question, should you be investing right now? And my dear friends, the answer is, of course you should be investing now. You should have been investing last month, last year, the year before that. And ever since you started earning money, you should have been investing. In fact, your parents should have been investing on your behalf if they could afford to. And you get the point, guys. That answer is simple. Investing is always a good idea, and the earlier you start, the better. And that talks to the concept of compound interest, where you grow your wealth over time. And we've all seen those graphs that grow exponentially. The more time, the earlier you start to invest. But guys, disclaimer. No two households' financial position is the same, especially in light of these times. So as much as you should be investing today, and I will cover how and where in this video, guys, this only applies to people that can afford to invest. Let me tell you what I mean. People who can afford to invest today are people that have cash on hand, people that have an emergency fund that backs every version of the scenario of cash flow in these times. You can't be investing money that you need soon, because if you lose it, guys, logically, you're going to go into negative investment, and that means debt, and that's never a good idea. Now, usually when I answer this question in these times, yes, you should invest, I'm met with one of two more questions. The first one is, but Nabeel, what about the uncertainty in the movements of the market since the crash? What about our economic future? And for those of you that don't know where this comes from, above the panic of this crash, through the uncertainty of the lockdown, the markets over the last few weeks have since recovered by a large percentage, pulling back almost 2/3 since its low. And there's a few speculations around that, considering lockdown extensions and when we start this economy moving, as well as companies' Q3 and 4 declarations of financial results. But here's the real answer, guys. This shouldn't concern you, because you can't time the markets. You just can't. I mean, you can try and get lucky, but I'll tell you that no one in the history has ever made this an exact science. So unless you have a magic ball, it's not in your control. So why worry about it? You know, on the topic of luck with this Sasol thing that happened recently, before I made this video, I'm going to tell you a little story. I got a lot of questions in when that share price dropped a lot as to, should we be investing, Nabeel? Come on, this is a price that hasn't happened in history, and we can buy low and sell high. And I did some research and I gave my recommendations, and you know what? Some people still bought. And then the next week, the price went up 67% or some number, and I got a lot of WhatsApp messages with smiley faces from the guys that bought saying, hey, I made a lot of money here. And the first thing I did was I looked at the share price, and I saw this little jump that happened, and the first thing that crossed through my mind was a dead cat bounce. Now that's when there's a big drop in the share price, and then it recovers a little bit due to speculation from investors. Now guys, I'm not an expert, I don't look at these shares daily, but the first thing I advised, and I looked at the guys, I said, look, you have a fortunate position, you got lucky, you made a lot of money now from a 67% rise, or whatever that number was. So I think it's time that you take money off the table and preserve this money. It's the clever thing to do. And long story short, some people saw the logic and others didn't and decided to hold it, and then the share price went negative, and some people lost money, or some people are holding out for it to rise again. And I hope that works out for them, but ultimately it's speculation, it's luck, it's not in anyone's control. Now guys, this is an example of individual share trading, and it's based on speculation, but I'll come back to this later in this video. Back to the topic of what you can control. So instead of trying to time the market and waiting for that perfect opportunity that's banking on luck, what you can do is invest into the market monthly, or even twice a month if you really want to. Buying into the market at different prices consistently, and this is called cost averaging. What you also can control is diversification, buying a spread of shares in different industries or sectors in the market. This will give your investment the protection of not having all your eggs in one basket. And I covered this in this video. Go check it out, how to invest, after you watch this video, and it will go into detail on what you need to know before you invest. So after that discussion, the second question people ask is, where can I invest? Where should I put my money, Nabeel? And the answer is quite simple, but before I answer it, I usually ask two questions. The first question is time. How much time do you have to invest for? Because in these current market conditions, guys, if your time frame is less than 5 years that you need to use that money, then you shouldn't be investing in the market. You should be investing in low-cost income funds or money market funds that can give you a stable return at a very low risk. Otherwise, what you're doing is gambling, not investing. The second question I ask is, can you promise yourself to trust the strategy? And what I address here is, are you willing to see through the ups and downs in the market? Because people's behavior is weird. It's so contrary to life and it's so intricate. You'd be surprised how many people say they understand that markets go up and down and they're really dedicated to reaping long-term rewards in the market. And they say they've read all the textbooks on investing and they understand the concept of volatility. And so they set up a textbook strategy in their investments. But then they see their first recession, their first crash, their first correction or black swan event or white swan event and fall prey to the media's fear-mongering and frustrated political opinions from personalities, and they get scared of the markets and ultimately they break their promise to themselves to trust the strategy. You see, investing isn't just to make money, because if you make money with no plan for your wealth in relation to how you imagine your life to be, then you're going to make money, but you'll also lose it. And so you have to have purpose behind your plan, and that plan needs to be backed with a strategy, and you have to understand that strategy. So now, to answer the question, where should you put your money, where should you invest if you have time and a goal? Number one is a buy and hold strategy. Basically, you can buy shares in any company where there's value in comparison to financials versus price, good management, and a long-term demand for the company's services. If it all adds up and there's room for growth and a good dividend, then go for it. This strategy works for a lot of people that know what they're doing and they can give that analysis the time of day that it needs. Number two is day trading, and this is when you physically buy and sell shares in a short space of time, guys. This is the most riskiest strategy out there, and it's usually the one that you see advertised, learn how to trade, and it pulls on the psychology of getting rich quick. So guys, be aware of this. It is largely based on speculation. Another version that is similar to share trading is called a CFD. This is also widely advertised, guys, and I've had a lot of questions on it. Guys, CFD is a contract for difference. Basically, it's like share trading, but you're not actually buying the shares. You're buying a contract for the difference in price on the price of the day for that contract in relation to that asset or commodity or price in the market, and you sell it at a future point in time for the difference in price. It's like share trading. Now, I'm not saying any of these two are bad options. I'm saying there's a lot of successful people doing this and they have very interesting strategies out there. But guys, it is not a side hustle. It's a full-time job. So if you want to get into it, do it properly. But most people are just trying to make a lot of money in the short term. So just be aware of that. Number three, now if you don't have time of day, the alternative is you don't have to look far and wide. Warren Buffett literally said it recently that in the uncertainty of the times that we're facing, most people are better off investing in a low-cost index fund. Now what that means is basically you invest in the broad space in the market and it's so cheap to invest and it tracks the returns over time, and if you put in little bits of money and use principles of cost averaging, you're going to make money over time. Now how you can apply this information, guys, is if you sit down and consider what's the vehicle I'm going to keep it in. So is it a unit trust or a mutual fund? What are the benefits of investing in this vehicle? Do I have access to it? Or do I need access to it? Or should I trade off accessibility for maybe a container that I can keep this investment in, this index tracker fund where I get tax benefits? And I covered this topic in detail in my Where to Invest series on the channel, so go check it out after this video. Number four, there are also newer trends in the market in the investment space as options that are showing up. I've picked one of them to talk about briefly in this video, and it's called a structured product. And that's a product that's usually designed to protect the capital of the investor while taking a bet on a future outcome in the market that can secure potentially massive returns. Now, I've added this into this video, guys, because I've heard this topic come up more often than not, a few questions here and there. So if you're watching this and you're interested in it, let me know so I can make a detailed video on this topic. And number 5 is a personal favorite, and the last one in this video, guys, invest in yourself. You can specifically spend money on learning, on developing your skills that you can use to approach the world of tomorrow after lockdown. Always upskill, always upgrade your mind, your mindset, your habits, and your education in your journey to financial freedom, in your outlook towards business in the world of tomorrow, guys. The other day I had a discussion with somebody that reached out on the channel, and they were talking about investing 1,000 Rand per month, but they also loved cooking. And so if you look at it and you take a standard investment that will give you a 10% return, and let's say you put 1,000 Rand per month or 12,000 Rand at one time, I don't want to get complicated in the compound interest calculation, but in the year you'll make 10%, 1,200 Rand on 12,000 Rand. Versus if they invested in their new food business because they were so good at cooking over this lockdown and they enjoyed cooking and understood that now there's open regulations to sell warm food within your community, and we discussed going on WhatsApp, selling food in the community and the cost that it takes to buy all the ingredients versus what they can sell at, they could make 200 Rand a day. Now just understand that profit margin, 200 Rand per day times by 5 days a week or 7 days a week, people need to eat, and you can potentially make over 4,000 Rand extra a month. What kind of investment is that? That's the best investment if it aligns to your goals, your vision, and you just have to think a little bit outside the box. And on that note, guys, investing seems like a daunting thing, but if you have an understanding and if you follow this process of thought when considering where you're going to invest, and you might use the services of someone you trust that can guide you through this process and hold your hand to make better decisions, then it is really an easy process. If you feel like doing it yourself or you partner with somebody that can help you through this, guys, it's always about growth. It's always about thinking along the right direction and making good decisions in life. Thank you very much for watching, guys. Don't forget to subscribe. If you haven't shared this video, send us a like on this video, and I'll catch you guys in the next one.